Ladies and gentlemen of the crypto space, we're live on a Thursday, February 18th, 11:27 a.m. It's time to get the ball rolling a couple minutes early. We've got a lot of information to discuss, and that should really not be a surprise to anyone at this point. Today's title of the stream is Crypto Monetary Velocity, the Critical Parameter. I talk about this often on Twitter, but verbally, it's important to say that is the parameter that sustains an economy. That is the parameter that creates value. Um, Folks know about it in much greater detail than myself from a historical perspective. My mindset, obviously, is from a value allocation perspective, and I obviously follow the technical data of the legacy financial system and understand the relationship between how that technical data relates to the performance of the economy versus what's occurring in the DeFi space, how the technical data, the monetary velocity, is related to the economy that exists in the DeFi space, and value is being seriously created. Lending and borrowing is through the roof. Transactions are through the roof, and it's just growing. Which is going to do exactly what it does in the legacy financial system: sustain the economy and draw in people to allocate value from underperforming assets to outperforming assets. And that is the way the system works. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial, DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Barry DGB's in the house. Igor, my man, Matt, hit the legs. 12 people in the stream, 10 legs. We're doing pretty good. Usually say we can do better. Probably get to that later in the stream. Hey, Costco's in the house. Argo Glass, happy to be here. Always a pleasure. Squanchy, my man. What we got up on the screen is the 30-year treasuries. So this morning we saw some serious bullishness, which means treasuries are selling at the long end of the curve, which is conducive with the reflation narrative. We're above the 100 SMA overwhelmingly, so at this point. So this actually fits the bullish confluence that I look for, which is a break to the upside through resistance, a retest, and a support. To top it all off, that occurred on a weekly chart. So there is significant bullish confluence going on. And also, we have a previous resistance, flip support. So, aside from the conversation to be had, the story to be had of what's driving this, and we have the deflation camp, which I agree with. I love the contrarian ideology. We have this technical data, which is contrarian of the contrarian ideology. The technical data says what it's saying, and this is why I value Stephen Van Meter's research so much, is because his technical data, the data that he looks for, that he's interested in, is looking for the subtleties that may indicate that this technical data is not necessarily what it's not saying what we think it's saying, and he looks for those types of contrarian events, black swan events, and that's extraordinary. His analysis is overwhelmingly useful, meaningful, informative, and enjoyable. Thank you, Stephen. Keep doing what you're doing, and I'm definitely a loyal fan. But this technical data, as of right now, is conducive with the reflation narrative, and what we have this morning is a quite interesting contrarian event. Broad equities markets are down in the face of the reflation narrative, as well as a more or less bearish dollar. Clearly, that's on the weekly. But what's interesting is on the weekly, we have yet to break out from the falling wedge. If you drop it down to the 4 hour, clearly we have breaks to the upside, but on the longer time frames, which is overwhelmingly more important than the shorter time frames, we do not. So, we're in a scary position, particularly on the 4 hour, where it looks like support has held on the 200 EMA. So what we look for bullish confluence, as I say, is a break to the upside, a retest, and a higher high. This is actually really, really scary. And this is probably, I don't know the technical details of the relationship between this and the equities markets, but we know that there's a depreciative force that a bullish dollar places on inflated assets. Folks like to typically think that it directly affects the equities market. There's no direct correlation, but the way I think of it is bullish dollar, bearish, inflated assets. I don't believe bullish dollar is bearish on assets. broadly in general, what I think is the bullish dollar is a wrecking ball for assets that are in inherently unstable positions. Um, Frankly, inflated assets and grossly inflated assets are seriously susceptible to destabilization. And that's what I'm talking about with regard to the great value reallocation. Inflated assets deflate, reallocating value to uninflated assets. Now, if I look at my equities portfolio, it's doing just fine this morning. Frankly, week over week basis, it's up. And that is also empirical evidence to support the value transfer process. Smart money is starting to allocate to the battery metal space, as generally commodities as well. Gold miners are absolutely getting hammered. Gold is my worst performing asset of the portfolio. Gold miners, gold streamers, silver miners, silver streamers are doing horribly, which is extraordinary in the face of long end of the curve yield bullishness. Short end of the curve is completely suppressed, albeit we have a bullish divergence where all the technical oscillators are pretty much pointing upward or indicating a likelihood of incoming yield increase. Tempted to say appreciation, but it doesn't work quite like that. So yield increase. So bullishness on the Stoke. MACD is not that informative, a bit flat, but the bullish divergence on the RSI as well. It is obviously clearly a distorted market. It is contradictory to what the story of the long end of the curve says, but the short end of the curve, I believe, to be suppressed by banks front running the impending stimulus, which creates a huge amount of deposits, which the banks need to hedge with treasuries, which is exactly what they do. Let me see what else is in the stream. Let's see what else I'm missing. Matt says, Noah, can you advise or point to the right direction on charting assets value to BTC? Well, assets value denominated in BTC. Yeah, I mean, okay, that's interesting. Let's take a look. I want to get to the Bancor chart. This looks really good. I mean, okay, well, let's look at Bancor because this is I denominate alt assets in BTC because when you talk about the crypto space, what you want to do is understand which asset is outperforming. Now, your base denominator is usually Bitcoin because Bitcoin is significantly outperforming as of yesterday every asset class on the planet. And this is the chart to look at. And it's just started, barely just started. So maybe we'll have a resistance flip support and then look for the higher high and the retest. We might see a retest of the green line. I don't think we're going to see, based on Willy Woo's analysis, a retest of the previous higher highs. I don't think we're at this point where we see a retrace like this. Let me break out the line. I don't think we see a retrace down to here. That'd be crazy. Because Willie has some serious technical data suggesting we're not going back to the 20s, where we have a minimum of like 36K in a black swan event. So I don't think we're heading down there. Can I not delete that line? So my expectation is not that green line. There we go. My expectation is probably around there. If that is the case, and we enter a depreciative cycle where we look for a resistance to flip support. This is the most reasonable previous resistance. Obviously, we may just get to somewhere around the last weekly close. Yeah, this looks incredible. And as you can see here, let's zoom out. I almost should go to the monthly. Let me show you guys the monthly chart. Look, we're going to a monthly chart on Bitcoin because that's where we're at. So this is the rip that happened from 13 to 17. It was 782% versus NASDAQ. This is not dollar denominated. So the rip from 17 and we're in 20, we have another 88%. Huh? Another 88% to the upside to go? Something like that. Point being, it just barely started. It just broke out relative to NASDAQ. But anyway, to answer your question specifically, all you have to do is denominate by Bitcoin. So let's say you want to look at DGB, BTC. That's how you do the pairing to see the relative valuation of the specific asset in Bitcoin. As you can see, it's still bearish. It's under pressure. It was completely rejected by the 200 EMA on the weekly. Let's take a look at Kyber real quick. Okay, see BTC. So this is still bearish. We're on the weekly. You have to get above the, was that the 50 SMA and the 100 SMA on the weekly. It's bearish. You're in a bearish situation. But BNT, BTC has completed its cyclical bottom, has completely broken out. It is above a previous resistance flip support. It's above the long-term moving averages, the 200 EMA, the 200 SMA, and the 100 SMA for that matter on all-time horizons. This is in a complete bullish breakout type position. Yeah, a little bit down. All right, let's keep it going. ZH3 Nitro. I definitely don't know how to pronounce that, but my man, I'm always here 5 days a week. Ryan's in the house. What's up? Squan Chi. Hey, Noah, is this correct? The increase in long term yields is a sign of some are fleeing to safety. No, the contrary. So when the yields increase, folks are selling the bonds. So they work inversely proportional. Selling of bonds increases rates, buying of bonds decreases rates. So if we see a completely risk-off event, we're going to see bond yields completely collapse. And at some point that may happen, but I don't think that is going to have a broad effect on the all asset space, all assets. I think that we have the great value reallocation where we have broad spectrum equities market collapse, the overinflated assets collapse, experience a mean regression, and that value goes to the outperforming assets, which is going to be value stocks, which is commodities, mining, metals, and crypto, which is why I hold the hedge in gold miners, silver miners, and streamers, and obviously physical itself. And we'll see what plays out, but that's my speculation based on my understanding of the fundamentals. Matt says, continued, how an asset's value stands in comparison to BTC. I'm trying to get away from comparing the value to USDT. Exactly. So I've got actually the next step. Not only don't I look at US dollar value almost at all, I'm starting to get away from Bitcoin value. And I'm starting to compare markets to markets, which is exactly what this chart is. This chart isn't necessarily interested in the US dollar valuation. Obviously, BTC is denominated in US dollars, but this chart is really trying to get to the heart of Bitcoin versus NASDAQ. So I'm actually trying to compare Bitcoin versus the relative inflated valuation of NASDAQ. So this chart basically shows Bitcoin denominated in NASDAQ. How about them apples? Has significant room to the upside and has barely started the inflation process. It has basically zero inflation relative to NASDAQ. And as you can see, comparing 2013 to 2017, Bitcoin seriously inflated relative to NASDAQ. We are not there yet. The difference is stark and quite easy to see. Pellets, what's up? Trevor, thank you for all the brain dubs over the months. I only will continue to do what I do, and I will continue my best effort to try and help as many people as possible. Matt, hooking it up with a $10 bill. I thank you very much. It's truly appreciated. I don't do this for the yield. I do this to try and help folks. Mark, I'm late. I'm late. You're never late. This shit's on YouTube, bro. It's all good. You could always watch it anytime. Trevor, curve fees growing insanely fast. Yes. Yes, they are. Those fees are ridiculous, by the way. Crazy. Squanchy, I see. Thank you for clearing that up. Absolutely, my pleasure. Could the run up in yields have to do with the debt market collapsing? Stop thinking in terms of collapse. Start thinking in terms of inflation and deflation, and understand that inflated assets experience mean regression, transferring value to underinflated assets. So if you have an asset that's super inflated, here's the baseline, and here's the underinflated assets or the assets that's zero inflation. When a crash happens, this is what happens. So your goal right now is to not allocate value to the inflated assets, but to allocate value to the not inflated assets. So when the inflated assets crash and mean regression occurs and everything returns to normal, your value significantly increases as the underinflated assets not even inflate, but just return to baseline. So this is with regard to Bitcoin and Nasdaq. It has barely started inflating. It's not like Bitcoin has a place to collapse versus Nasdaq. Now, bear in mind, Nasdaq can collapse, in which case this chart goes up. Nasdaq goes down, this chart goes up. So, in which case, we do have to consider. But there's so many strategic plays in the DeFi space, which is exactly the point. You have plenty of ways to protect to the downside for Bitcoin, Ethereum, and countless other assets at this point, for that matter. And Bancor introduced its V2.1, which is an extraordinary portfolio consideration, where you could retain exposure to a single asset, which allows you to experience full upside potential. To keep in mind, you also experience full downside potential. And the whole point is you're able to capitalize on the volatility, extracting value from transaction fees, as well as the incentivized yield. And the Vortex puts Bancor in an extraordinary position to be one of the most unique AMM in the crypto space. Each one has its place in your portfolio for different purposes. Bancor allows you to retain single-sided exposure, full exposure to an asset's appreciation and depreciation, pooled assets, paired assets, cap your upside and cap your downside, behaving like an option straddle. So if you're just more interested in allocating a large amount of value to produce a revenue stream, and you want to cancel out the volatility or mute the volatility, the paired pools are for you. If you're interested in BNT and the extreme appreciation that I'm expecting, as well as have single-sided exposure. So if you have Ethereum and you are expecting it to just go to 10,000, then Bancor is a place to allocate value. What's pertinent is Bancor versus the other pools is the relative degree of risk and exposure. In Bancor, you're exposed to the full upside and downside potential, so there's risk associated with it. With regard to other pools, you have less risk, but you are experiencing a permanent loss. And permanent loss is uh, hyperbole, but it mutes the upside. So if Ethereum goes to 10,000, you're not getting a 5x. You're going to get less. But when Ethereum goes to 10,000, it comes back down to 3,000 or 4,000 as it cycles. You're going to be capitalizing the crap out of that volatility and making huge amounts of transaction fees along the way. And so you're replacing the appreciation to create value with a recurring revenue stream, capturing the transaction fee revenue. So that's the deal. Now, all of these puzzle pieces have a part in a well-structured portfolio, and that is the point that I cannot make more or make enough. I cannot make that point enough. Mark says market v market. Well, it's not 2021. That's just market v market, which is something I picked up on from Raul. It's the way he looks at things, and I obviously apply my own verbiage and description to why I believe that is the most important way to look at things. I've learned an enormous amount over the last couple of years, and I've learned to think of markets versus markets and relative degrees of inflation as some of the most important ways to see whether a market is about to underperform or outperform. And the goal for proper or optimal or strategic portfolio management is to reallocate value from underperforming asset classes to outperforming asset classes based on the relative degree of inflation. Tom says, why is FTX accumulating Rook? Because Rook looks damn good. Rook is the supreme, the forefront of L1 Ethereum gas solutions. Plus, it's about to get whitelisted on Bancor, so you're going to be able to generate significant yield from just Rook, not from providing liquidity to the KeeperDAO platform. KeeperDAO has not dropped from my radar at all. That is overwhelmingly an important part of my portfolio. Do note, my position size is now reflective of how I treat risk on assets? Sure. If let's say I'm expecting Rook to go 5x, 10x, and I apply 100 grand to it, and I turn 100 grand into 1 million, that's not the way I think about portfolios. I don't want to turn 100 grand into 10 to 1 million. I don't want that risk. I will need to be able to sleep at night. So when I think of assets that'll go from 10x, 1,000%. I want that to be the smaller part of my portfolio because in order to get the gains and to keep the portfolio in balance, I need more of the assets that can only go up 20%. I need more of those assets. You got to think very like yin yang, man. Chinese, balance, harmony, homeostasis. Come on, let's get hippie and shit. You know what I'm saying? Yeah, it's far out. So I want less of the assets that are going to more likely than less likely outperform. And that's how you keep a balanced portfolio. So my goal is not to make the most money possible. My goal is to not take on the most risk possible. My goal is to have a finely tuned, structured portfolio that does not go significantly up and does not go significantly down. I am factoring in risk into my portfolio. I do not want my portfolio to go 10x. I do not want to make $1 bajillion because the odds are a portfolio like that is not going to achieve the optimal outcome for the person creating the portfolio. Um, Human says Noah is the man. Thank you. I I say thank you humbly. There's plenty of people that are smarter than me, but I hope what I say helps. That is the whole point of doing this. I've learned a lot, and I hope to share it. Have you looked into the world of Binance Smart Chain? Sure, not interested. Yeah, fees. It's not on my radar. No, it's not worth my attention. Difficult question. Not worth my attention currently. And my speculation is it's not worth my attention ever. Um, Difficult question. Gaining liquidity war, but deserve the liquidity market. You bet on Rook or Vanguard have better performance. Completely different assets. Absolutely, completely different assets, and completely different roles in a portfolio. Rook right now is a risk-on position until the protocol evolves, until there's integrations, until it starts to mature. It's risk on. Bancor is quickly becoming what I expect it to be, is a financial primitive. Bancor has, in the core of its protocol is a self-sustaining feedback loop that's going to drive liquidity into the system, and the protocol is designed to create value. And now that it's a um, the monetary velocity is there because you can now borrow against your staked bank BNT. So there's borrowing and lending of sorts. So there's literally a real, full, robust monetary velocity associated with the Bancor protocol. Everything changed with V2.1. Everything. The Bancor has characteristics of a bank now with lending and borrowing components and debt and interest and yield and incentivized supply disruption and inflationary and deflationary monetary properties. So definitely a part of the portfolio. Um, I treat it as a financial primitive. What do you do with financial primitives? You accumulate them. You generate yield from them. You create a recurring revenue stream from them. You live off them. Those are the assets that are working for you instead of you physically working. You don't liquidate the core position. Financial primitives, you don't need to liquidate the core position because they create a revenue stream for you for life. Mark says, kind of like water always wants to find level. Yes, yes, that's right. So right now you got a bunch of water sitting at the top of a mountain. And it's like, at some point, the water's going to be like, why the heck am I up here? And that's NASDAQ. Why is the water up there? It makes no sense. How much higher can the water go? It's at the top of the damn mountain. So the water is going to come down. It's going to fill the reservoir at the bottom of the mountain. And that's where all the value stocks are. That's where commodities, mining, and frankly, folks see these massive numbers in the crypto space, but that's where crypto is as well. Crypto is not an inflated asset class. it has just started to outperform the other markets. It's broken out, and it had to catch up because it was significantly beaten down in the last appreciative cycle heading into 2020. It was extremely deflated, it was over deflated, oversold. So it had a long way to go for its mean regression to get back to where the other markets were or are in many regards still, because it is just yesterday that Bitcoin started technically outperforming as Nasdaq relative to 2017. And it's all relative. Everything is relative. Christopher says need to work, but jumped in to say hi. What's up? I got to work too. So I keep glancing to the right, and glancing to the left is my data. White Wolf, have you heard of Token Terminal? Good data can be found there. Yeah, I need some data. I really want to see monetary velocity, the amount of debt and repayments, lending and borrowing, and combined with transaction fees. I really want to see it. I know anecdotally it's vertical, but I would love to see the technical data graphed out, plotted out on a chart. Thank you for the daily wisdom. What impact do you think F 2.0 will have on the markets? F 2.0 changes everything with regard to gas prices. And in fact, F 2.0 is likely to become a deflationary protocol. Um, that's crazy. So F has the incredible potential to significantly appreciate over the coming years. And this is where time horizon comes into portfolio allocations and how you size your portfolio allocations. They have to be very considerate of time horizon. For instance, my time horizon for Polkadot and Cosmos are years. I don't even think about them. They're just in the portfolio. And frankly, Cosmos is absolutely vertical. The China narrative is stronger than ever and is only going to get stronger. And frankly, when you're talking about Cosmos, you're really talking about like East China versus the rest of the world and the digital yuan, and really a geopolitical complexity that's going to come in the couple coming years. Digilight, we're the crypto hippies of the financial freedom. My man, far out, dude. Yeah, I'm also a little strange, but somehow my wife still loves me. Ryan says Binance deflationary policy. Yes, so I understand the inflationary, and Binance has the deflationary burn component, so that's cool. Um, I think BNB could significantly appreciate. And don't get me wrong, you can't own everything you want to own. I don't want to own it, and it's going to appreciate. Everyone has to make their own choices for what they choose to put in their portfolio. And for me, I absolutely have no interest whatsoever in Binance Chain or BNB. I just don't care. So that has nothing to do. That's mutually exclusive to the fact that there is a burn component. So it has a significant deflationary force, reducing circulating supply, which puts pressure to appreciate. The odds are it's going to go up significantly in value, but I just don't care. Um, Charlie G's in the house. Always a pleasure. Hit them likes. 33 people in the stream, 21 likes. We can do better. Tom says, "Do you hold any Badger?" I don't know. I hold Badger. I wouldn't. I'm not in a position really to hold it. I have all my liquidity tied up. Um, I I'm tempted. I like their relationship with Yearn. Um, their platform has proved stable, has proved reliable thus far. The only thing that's lacking for me is a secondary DeFi protocol, meaning it basically has the inflationary component and the deflationary component. So it has a monetary policy. There's no transactions, and there's no lending and borrowing. I mean, clearly there's third-party lending and borrowing where you could potentially do stuff on other platforms, the other AMMs, but it's a secondary protocol, a secondary DeFi protocol to me. And that means I'm not overwhelmingly interested in it. I'm more interested in transaction fee revenue and platforms that are money markets like Aave and Bancor now with VBNT that you can leverage and take on a debt position. That's incredible. I mean, Bancor's protocol has just exploded on the scene with some extraordinarily innovative concepts that bring together their history, their experience, the progress and innovation of the DeFi space over the last year, and Bancor just really like leapfrogged the crap out of everyone else. Now, obviously, fundamentals and the implementation, the technical implementation, is completely separate and apart from the price action. But interestingly, we're seeing the price action do justice and be respectful of what they've done technologically, because this is a clear trend breakout. And well, you guys want me to show you what's even more exciting? You guys see this peak right here. This is DeFi summer. That's all it is. It's 4 months. What happened last year between March and end of August, May and end of August. This ain't shit. Let's go out to the monthly. No, I like them monthly charts. Yeah, look at 2017 and 2018. Ooh, wait until this cyclical bottom clicks in and look at the bullishness on the Stoke, printing the higher low, and the bullishness on the RSI. So there's bullishness there. And obviously the history of the asset is relatively short. We get much longer history with Bitcoin, obviously going back to early days, calculated, of course, in some charts. But this has never significantly outperformed. So the potential here is enormous. So size your position accordingly. Take a position. I would say that's just reasonable. Don't take on excess risk. Protect the downside. Be respectful of your portfolio and protect your gains. And don't oversize these damn positions, people. I could drop 100 grand into this. I don't. It's not the way you do it. For an asset that could potentially go 10, 15, 20x on the money, you want it to be a small percent of your portfolio. And you need the vast majority of the value allocated to the risk-off assets, generating recurring revenue streams, and being less volatile and relatively protected. You want the vast majority of value to not go up a lot in value. The vast majority of value you want to be in stuff that's going to go up 20%, 30%. But interestingly enough, you think Bitcoin is going to go up 30%? No, the projections are another potential 5x. So, risk off in crypto is the only market on the planet that's asymmetrically appreciating. Oh my God. That's crazy. Heirloom, my man, recommendations to swallow the high exchange rate and swap in DeFi token. I understand. I myself, I think I've spent $110,000 on transaction fees, Ethereum gas, over the last year. So I understand and I appreciate the complexity. I just went to Bancor to look into restaking yielded Bancor, and I think it was a $750 transaction fee. So I am even that stops even me. So I know, I understand the pain and the burden of trying to get to critical mass, and that's the whole point. And that's why gas fees at 223 Gwei right now. That is not representative of Ethereum failing. That's representative of Ethereum succeeding, of how many people made that much gains that they don't care about two, three, four, $500 transactions. Because that's how much opportunity is in the space right now. Liquidity is going to flood Ethereum. It's going to keep pouring in. This is a let me show you guys. Let me show you. Nope, that wasn't the title. Okay. The critical parameter is monetary velocity, but what I described in the Twitter post was how do we know it's sustainable? How do we know it's different this time? We know it's sustainable because it is exactly what sustained the legacy financial system. It's what this legacy financial system runs on. It's monetary velocity. It's lending and borrowing and transactions, volume, metaphoric velocity, how much movement money is doing. And at 223 Gwei, that money is on fire. Because if you got transaction fees like that, and you have 223 Gwei, the only way to account for that is extraordinary monetary velocity. Incredible. Algorand, not on my radar. But the only other L1 that's on my radar other than Polkadot and Cosmos is Elrond. And I like to think of Elrond as the bag that got away. I don't think many other platforms, L1 platforms, have much potential at all. So it's predominantly, in my mind, Cosmos, Polkadot, and Elrond. Any other smart contract platform, I just have no interest in. BSC, Cardano, I don't have any interest whatsoever in them. L2 solutions are cool, and frankly, those L1s when they come online, uh, uh, um, literally like Algo and Cardano, they quickly can become L2s. And frankly, anything other than Ethereum that's an L1 really is inherently an L2. But you got stuff like Maddox and Loop Rings L2, and all these are really cool. And how it's going to evolve, I don't really know. But there's one thing I do know, and I've said this before. Um, Ongoing disruptions are near impossible to disrupt. Lyft will never disrupt Uber. Apple will never disrupt Microsoft's primary business, which is business applications. It's been 20, 30 years. They're not going to disrupt them. They're not even trying. Apple isn't even trying to disrupt Microsoft. Apple never disrupted Microsoft. Might be one of the biggest corporations on the planet, but Apple never disrupted Microsoft. And that's the point. The disruption, the project with the network effect always retains the lead and is near impossible to disrupt. And that is what Ethereum is. It's an ongoing disruption. And network effect and psychology and emotions will not be disrupted. Sorry, eyes aren't too good. What chart do you have up? This is Bancor on the monthly chart. There's not much information on the monthly because of how relatively new it is, and we're talking about years. But I do like the weekly chart because the weekly chart shows 2017 and where we are, and on the shorter time frame charts, we know we have a significant breakout, previous resistance that's trying to flip support. It's a little speculative right now to take a decent sized position, but I'll show you why. Because if you go to the 4 hour, you might even have to go to a shorter time frame. Oh, it's so laggy when I'm on the stream. Let's see, because you have the breakout of the previous higher high, of the previous high, the previous resistance, but you still haven't retested and printed the higher high. So three things for bullish confluence: breakout, retest, and the higher high. I'll draw it real quick. So let's say you have a resistance line and a chart, a breakout. You got to wait for the retest and then the higher high print. And there's your bullish confluence suggesting it's safe to apply maybe a little excess position size because there's more likelihood than less that it's going to continue to appreciate. And as you say in the casino all the time, 51%. If you do this, 51%, the odds are you're going to win more than you lose. And that's all this is that kind of speculation, that gamble. And you're looking for this technical data to minimize the losses, get that 51% odds mark so you win more than you lose. StakeNet, Hydra, DEX. StakeNet is big deal. StakeNet is basically paralleling um, BlockNet in many regards. Both projects have unique properties. StakeNet went the Lightning Network route, and Raiden for Ethereum and the L2 solution. So StakeNet's definitely on the radar, but they're illiquid. StakeNet and BlockNet are completely illiquid. They're not involved in this DEX liquidity. They're basically relegated to centralized exchanges, and only a couple of them for that matter. I have a StakeNet masternode. I have a BlockNet masternode for years at this point, and I have no interest whatsoever of turning them off because I believe what they're doing, and I've just had them for years. So big stuff. So never go all in, never spread too thin. Stuff like that should be like 1% of your portfolio, a half a percent of your portfolio. All altcoins should be probably 15% of your portfolio, 20% of your portfolio. with the vast majority of value allocated to the macro assets, which are going to be less volatile, and in crypto, the macro assets, the risk off, are asymmetrically appreciating. So focus on downside protection, risk management, and yield, recurring revenue streams. I had a nice post last night with all those little emojis. Those are really the rules. I'll repost that today. I guess I like that post. Those are the rules of how to grow a portfolio and not take risk and be able to sleep at night knowing that you're protected against the downside, guys. Did you like any tokens that you like that has a high staking APY? Massive, massive. That's what I've been talking about for over a year at this point. I mean, you really want to look into Bancor. You really want to look into 1inch. And those are the two that I would, and Curve. Curve is the forex of the crypto space, cranking out 50% on VE Curve is ridiculous yield. But you're talking about double-digit percent yield for these protocols. And that's what's going to suck in the liquidity from the legacy financial system like a vacuum. Like a vacuum. It's going to just keep growing. 30 people in the stream, 25 likes. We did better. Thank you all for joining 12:08 p.m. on a Thursday, February 18th. It's always a pleasure. Tell everyone to subscribe, and I will see you tomorrow. I wish you all a wonderful day now. Peace.